Hi, this is Michael O'Leary from By the Book Taxes, back with this week's video blog. For the next few weeks, we're going to talk about federal tax levies. Today is an overview. Over the past few weeks, we spoke about federal tax liens, which is when the IRS makes a claim upon your assets in order to collect a debt. Now we're talking about the levies, where they're actually taking your assets in order to satisfy those debts. So here's a very common example of a levy. I'm sure a lot of taxpayers can relate to this. You go to the ATM machine and go to withdraw some money from your bank account, and you get a message on the screen that says, you can't take any money out because you have zero in the bank. And you say, how did this happen? So you contact the bank, and they say, oh yeah, the IRS presented us with a levy because you owe back taxes. So they took the money from your bank account in order to at least partially satisfy the tax debts that you had. And you say, oh my God, I had no idea. Well, to better understand this, we have to go back and review the IRS collection process, because most times people who have tax debts ignore it, and that's why they end up getting their bank account cleaned out. Okay, excuse me. This all starts when you file a tax return and there's a balance due. The return is filed and processed by the IRS, and they assess the tax. Within 10 days, they send you out a notice that says, okay, Mr. Taxpayer, thank you for filing your return, and here's the balance due. Please pay within 10 days. If they don't receive payment within 10 days, what's called a statutory lien arises. What they mean by statutory is that it is by law or statute. The IRS has the legal right to collect this money and to put a lien on your assets. If you still don't pay, a number of letters of escalating, threatening demands for payment ensue over the next probably 90 to 120 days. Ultimately, if you owe them more than $10,000, the IRS will file a notice of federal tax lien, which basically destroys your credit rating and puts all potential lenders to you on notice that you owe this tax debt. Eventually, you will receive what's called a final notice. It comes in a few different forms. It could be called the Letter 11, Letter 1098, 1058, I'm sorry, CP 90, and it says you have 30 days to appeal, and if you don't, the IRS will begin levies probably 60 to 90 days down the road. So that's an overview of the IRS collection process. Notice that the levies are the last step in this. So what happens is people who have ignored the letters from the IRS and just not paid the balance due, eventually the levies kick in and their assets get taken. Okay, 3 different types of levies that taxpayers should be aware of. Excuse me. The first is the regular levy. It's a one-time where the IRS just cleans your bank account out. Now, the IRS could do it more than once. They could do a series of regular levies, but they would have to go get another levy in place every time they attempt to do it. So typically the regular levy, it's the first time and they clean you out. The next one is called a continuing levy, where they levy your wages, your paycheck. So every paycheck, they are taking a big chunk out. And the purpose of this, both with the regular and the continuing levy, is that this causes real pain to the taxpayer. And generally speaking, the taxpayers who have ignored all the IRS notices and have ignored everything, this gets their attention. And the next thing you know, they reach out to a tax professional and they say, help. But that's why they ignore it until they feel the pain, and this is pain. Okay, the last type of a levy is a levy on a retirement account, IRA, 401k, Social Security. A lot of people think that, oh, the IRS they can't take my IRA or my 401k or my Social Security. Yes, they can in certain circumstances. And that circumstance is, for example, if the taxpayer can access the funds in their IRA or 401k, if the taxpayer can withdraw that money, then guess what? So can the IRS. The concept, which is really a term of art, not a legal concept, is called to step into the taxpayer's shoes. So if the taxpayer is able to access these funds, then so can the IRS. All right, over the next few weeks, I'm going to go into a lot more detail on each of these types of levies, the regular, the continuing, and the retirement accounts. And I will also tell you how to avoid a levy if you're in the collection process and you're heading down that road, or how to deal with a levy once it's already occurred. Okay, if you have unfiled tax returns for years, if you owe the IRS a bunch of money, if you're getting a series of escalating, threatening collection letters, if the IRS has already cleaned out your bank account, please call me. I can help.